very good morning, guys. Thursday closed green. Nifty finished up 34 points on Thursday. Sensex was up by 109 points. On paper, a quiet day before the long weekend. But pull the chart and look at where they had been. Nifty touched a high of 24,261 and then gave back almost 200 points into the close. And Sensex was a completely different story. The expiry was crazy. Ran all the way till 77,803 and surrendered back 700 points. The index didn't drift higher and rest. It rallied, hit that resistance and got sold back to flat. And underneath that flat close, the pros did something they hadn't done all week. They went and bought volatility. While the crowd was selling insurance into the calm, the pros were quietly buying both sides of the move. Today we have come back from a 3-day weekend into the eve of monthly expiry that is going to happen tomorrow, with the lowest volatility reading in the weeks and a smart money positioned for it to wake it up. This is the Tanmay Edge. You are listening to episode 69. I am Tanmay Kurtagoti. Let's go. Starting with the tape, Nifty 24,056, Sensex 77,100. Both up about a 0.1%, but the story isn't the close. It's the distance between the close and the high that happened on Thursday. Nifty printed 24,261 and finished 205 points below it. That long upper wick is the signature of a session that ran into a seller and couldn't get past him. Under the surface, it was a split tape. The autos carried the day. The auto index up 2.25%, M&M up almost 4%, Maruti 3.7%, Indigo up 4.7%, but IT was down. Metals were the worst sector and power grid lost almost 2%. 25 Nifty stocks up, 25 down. Dead even breath on a green headline. A rally with no broad participation and a rejected high into the resistance being defended in real time. And then Friday the market was shut due to Muharram. So that rejected high has been sitting there untouched for 3 days. Today we find out whether anyone wants to attack it again or no. Now, who's moving this market? NSE and NSDL numbers, nobody else. For the first time in a stretch, the FIs bought net positive on cash, about 384 crore provisional, near 1800 crore custodial route, small but a reversal. The domestic institutions bought 5,748 crore, the second enormous DI day in a row. This market is carried on the back of domestic money. In the futures, the FIs lightened up too. Their net index short came from 2,29,053 contracts to 2,23,809, covering about just 5,000 contracts. But hold the scale, they are still short 2,23,000 contracts. East of the gas didn't turn the car around. For the year, the FIs are out about 66,000 crore and the domestics have already brought in around 93,000 crores. A domestic bid underneath a foreign cap on the top. That's the whole market right now. But cash and futures are the headline. The real tell on Thursday was in the options book. The index option open interest by participant wise in the order that matters first. Pros first, then the foreigners, then the client we are looking into. The pro desk on the call side, net long 1,14,399 contracts. On the put side, and this is the number that changed, net long 1,14,140. The day before, the pros were net short puts by 39,125. In one session, they swung more than 1,50,000 contracts to long put side. So the pros are now long calls and long puts. Understand that when a desk is both long wings, they are not making a directional bet. They are buying volatility. They are paying for a move in either direction into the monthly expiry. The FIs net short 2,60,000, but they covered about 31,000 of those call shorts from the day before, and net long puts of around 5,96,646 trimmed slightly. So the FI book is still defensive, short calls, long puts, but a notch lighter than it was. They are protecting a long stock book, not a calling a crash. And the client, the retail crowd, net long calls 1,39,519, but on the put side they are net short 7,30,000 contracts, and they deepened that short by almost 1,50,000 contracts on Thursday. The crowd is selling puts hand over fist. Selling a put is a bet that the market stay calm or goes up. It's a short volatility bet. So the whole board, the pros are buying volatility and the crowd is selling it to them, and at the lowest volatility reading in weeks. When smart money and the crowd takes opposite side of the volatility trade, that cleanly I want to be standing with the pros and I am not standing with the crowd. Now the 30th June monthly chain at Thursday's official close, and this is where the day lives. Support first. The 24,000 put is the single biggest position on the entire board. 1.25 crore contracts open interest and it grew. That level that held every minute on Thursday, the low was 24,039 and it still is the heaviest line out there. That is your support and it is where you buy. Resistance, the 24,200 call is the biggest open interest near the money. 1.03 crore contracts, and the writer added almost 40 lakh fresh contracts there into the Thursday's fade. On the exact day, index poked to 24,261 and got sold. They stacked the 24,200 call. Max pain sits at 24,100, right where we are trading. So the range is extremely clean. Support at 24,000, pin at 24,100, resistance at 24,200. Now the volatility, because this is the part that flips the trade. India VIX closed at 13.05, a multi-week low. The front month ATM IV is down near 9%, while the next two expiries are 10.8 and 12%. The near term wall is the cheapest on the curve. The ATM straddle for tomorrow's expiry is about 225 points, which puts the one standard deviation move near to 275 points. Roughly 23,800 or 780 on the downside and 24,330 on the upside. Remember these levels: 23,780 on the downside, 24,330 on the upside. That's the band the options are pricing. And here's the read, guys. Volatility this shape, a range this coiled, the pros freshly long both wings, and a monthly expiry tomorrow. That is not a setup for more compression. That is a setup for an expansion. The conventional take says expiry week crushes volatility and you sell the straddle, while I am telling you the opposite this time. The volatility is already on the floor. The smart money is buying it, and cheap optionality into a coiled monthly expiry is the trade you own, not the one you sell. Write this down, guys. And so one more layer, because we walk into a cold off long weekend. Wall Street closed lower on Friday. It's fifth straight down day. The big tech and AI names wobbling. Europe was red. Asia this morning is split, and the gift nifty is basically flat right now. So no global shove at the open, but a wobbling Wall Street is exactly the kind of fuse that lights the volatility the pros just bought. The one clean tailwind is crude near $70 and still close to the multi-month lows. The import relief India wants. The rupee is steady at 94.40, a friendly crude backdrop, a soft global tape, and a market coiled at the lows of its volatility. So here's how I'm playing it, and the bias has not changed. Buy the dips. Support is at 24,000. That's where the put writers are sitting. That's where Thursday's low held, and that's where you buy, with a stop on the closing break below it. The pin is at 24,100. Resistance is at 24,200. And the way the writers defend it tells you whether the next leg is up. Break it and hold about 24,200, and the short calls have to cover, and that's the squeeze towards that 24,300 and then 24,500. Lose 24,000 on closing basis and the buy and dip is wrong. The air pocket opens directly towards 23,800, and that's where your long puts earn their keep. So but the structure of the trade is optionality. So wall is a multi-week low. The pros just bought both wings and we are coiled into a monthly expiry. So I'll rather own a cheap call on the dip than sell a straddle into the pin. If the range breaks, the move is more worth multiples of what the option costs today. But the dip, own the optionality, let the expansion pay. Don't sell the cheap premium into a coil. The pros are loading up against 24,000 is the support, 24,200 is the resistance. The pros just bought volatility at the lows. Watch 24,200 for the break and 24,000 for the dip, and either way you will see it before the chart does. That's the tape behind the chart, guys. You just got earlier. This was the Tanmay Edge, and see you all once again tomorrow. Have a happy week. Happy Monday.